Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2024 question number 29. Look here, what is the requirement? There are two requirements, break-even point, related question. What is that? The variable cost per unit and break-even point units of the company. Look here, there are small question, but there are so many calculations. Look here, the activity level of a manufacturing company is 100,000 units. There is a company produce the 100,000 units. Okay, the following information relates to year ending 31st March 2024. Sales, this is a total one, no? 12,000. This is a 12 million, no? 1,000. And total fixed cost 3,000. Fixed profit 2,000. Okay, how can we calculate variable cost? You know, this is the requirement is the variable cost per unit. Variable cost. How can we calculate? You know, look at the question. There are three items there. Sales there, total fixed cost there, profit is there, number of units is there. Therefore, the all items we can find together. What is that? There are equation. How can we calculate profit? I calculate unit profit per unit, only per unit. Okay, how can we calculate? Unit selling price per unit, selling price per unit, only we use the per unit. Okay, minus unit variable cost per unit, variable cost per unit, deduct fixed cost per unit. What is the requirement of our requirement? Variable cost per unit. This is our requirement, our person. I use X minus. We can find all this one. Look here, question said that sales is total one. The sales means total means 100 units. Sales. Therefore, this is 12,000. I dividing. There is a 12,000. No? 12,000 means there is another 3. This is the 12,000 sales related to 100 units. 100,000 units. Therefore, I dividing the number of units. Therefore, I can calculate 120 is unit selling price. Why? Unit selling price multiplied by number of units, we can find the total sales. Okay, unit selling price multiplied by number of units, we can find the total sales. Therefore, total sales I dividing number of units, I can find the answer of unit selling price 120. This unit selling price is 120 rupees. After that all are same. Look here, this one, there is a total fixed cost is there. We want unit fixed cost. Okay, therefore 3,000 means 3 million. No, there's another zeros. I dividing this 300,000 total fixed cost are related to 100,000 units. Therefore, I dividing 100,000 units. Therefore, after that, I find 30 is unit fixed cost. Therefore, unit fixed cost per unit is 30. Next one. There is an answer of profit. Look here, there is profit, no? there is a profit. There is a profit is there. Profit is related to 100,000 units. Therefore, we want profit per unit. Therefore, 2000 profit related to 100,000 units. Therefore, I divide 100,000 units. After that, we can find the 20 is per unit profit. Okay, I use this answer. 20. We can find x. X is minus, no? We can, therefore I carried this side. X equal to this 20 is carried to this side. 120 minus 30. This is go to the opposite side. Therefore I write minus 20. There is answer. X is 70 rupees is unit variable cost. Unit variable cost is 70. Unit variable cost. Variable cost is 70. There are two answers. We find the break-even point units. What is the equation for break-even point? Break-even point units. Break-even point units. How can we calculate? Total fixed cost divide in unit contribution. How can we calculate unit contribution? Selling price, unit selling price minus variable cost per unit. Variable cost per unit. Total fixed costs are already they supplied us. What is that? Total fixed cost is 3000. 3000 means 3 million. 3000 I add another zeros. Unit contribution. Selling price is there. Look here, selling price is 120. Variable cost is 70. Okay, unit selling price is 120. Variable cost per unit is 70. Unit contribution is 50. Therefore, we can find 60,000 units. This is the break-even point. Answer we can find easily 60,000. 60,000 is there. Answer is 5 for question number 29. Question number. In next video there is a long-term investment question. In next video we meet question number 30.